Well, according to JP Morgan, Bank of America, and Barclays, Libyan oil production, halted by the country's civil war, is likely to remain suspended for the entire year, the rest of this year. For more on Libya and the oil markets, we are joined over the phone by Bloomberg Best and Macquarie Capital Europe analyst Jason Gammel. Jason, thanks so much for joining us again. And do you agree that we could see Libyan oil off for the rest of this year?
Well, it certainly looks that way, Betty. I mean, it's obviously now a political and military situation, and how that sorts out is obviously very difficult to predict. But given the level of violence that you've seen around a lot of the export terminals, I would suspect that that's probably a good projection, and this could really actually extend well into 2012 as well.
Okay, so is the price of oil then reflective of this yet?
Well, I think when you're looking at Brent at around 115, that it is beginning to reflect that you've taken some slack out of the system. But Saudi Arabia has been responding. We have seen Saudi exports pick up as a result of the loss of Libya. So this is containable. What we worry about is if there's any further loss of productive capacity. If this were to spill into Algeria, for instance, then you would really start to see the market tighten up, and that's when we would really be looking at oil potentially setting new highs again.
But I thought part of the problem here was that Saudi Arabia, yes, they can make up for some of that loss in oil, but it's not the same type of oil, is it? I mean, it's much more complicated than that, isn't it?
It begins to get very complicated. The Libyan crude is generally taken short haul into Mediterranean ports, and it's very high quality with very high yields of gasoline and diesel. The Saudi crude that will be replacing it is still good quality, but not as high quality, and obviously has to move a further distance. So you're putting a lot of logistical complications into the system as well. That does push prices up, and that's why you see prices going up. It's not just taking slack out of the system, it's to compensate for those logistical problems. Okay,
so then we're going to settle at some point at a higher, I want to say a higher high in a way, because we're not counting perhaps those complications in yet into the price of oil?
Yeah, I think that's a fair point. And, I think that the market initially reacted negatively to the Japanese situation in that there was going to be a lot of demand destruction.
Right.
We agree with that in the short term, but we think that the Japanese will actually be demanding more oil and fuel oil to generate electricity. So, I think between the logistical issues moving into the peak of refining season and the Japanese situation, you probably do see prices push up from here.
Okay, Jason, thank you. Appreciate it. Bloomberg Best, Jason Gammel on the price of oil.